for policymakers and regulators, it's important for them just to keep that open door policy, make it easy for service providers to access you. I think regulation is often a product of conversations, really. We are now in the era where innovation is really fast-paced. So for regulators not to continue playing catch-up, just keep the door open.
Welcome to Financial Inclusion Unlocked, the podcast featuring conversations with innovators, practitioners and thought leaders who are working to unlock the potential of financial inclusion. Financial Inclusion Unlocked is produced by SIJ Media, and thanks to our sponsors for Series 2, CGAP, the innovation lab for inclusive finance housed at the World Bank that works to advance the lives of people living in poverty, especially women, through financial inclusion. And I'm your host, Jack Farron. Now, mobile money has done something incredible. Across Sub-Saharan Africa, South Asia and other emerging markets, it has brought hundreds of millions of people into the formal financial system. The majority of those that have never had a bank account or access credit, and this is a genuine achievement. But scale brings new vulnerabilities. Fraud and impersonation scams are growing, fees are often opaque, and when something goes wrong, recourse can sometimes be hard to find. Consumer protection is therefore fast becoming one of the defining challenges of the mobile money era and the wider financial inclusion sector. In this episode, we sit down with Kennedy Kipkemboi, Director of Public Policy and Advocacy for Mobile Money at the GSMA. Now, Kennedy brings a rare perspective, someone who has seen the challenge from both the operator level and the global policy stage. Together, we explore what the consumer protection landscape looks like today, where innovation is happening, and how regulators are learning to balance growth with protection. Series 2, Episode 9 of the Financial Inclusion Unlocked podcast, recorded in Nairobi, Kenya. Ken, welcome to the Financial Inclusion Unlocked podcast.
Thank you very much. It's good to be here.
I'm happy to be in Nairobi and get away from the winter weather in the UK. So before we get started, it would be great just to hear a little bit more about yourself and your career up to this date.
I work with the GSMA. GSMA stands for GSM Association. It's an industry association for mobile network operators, but then of course included there is also mobile money providers. Prior to that, I worked with a telco in Kenya, Safaricom, where I supported their work around policy advocacy. But I have a very interesting past. So I also worked in customer service. So all in total, bringing it to about 15 years experience within the telco fintech space.
Our audience, they're across the world, including Europe and the US. Mm-hmm. When we talk about mobile money, they might not have a real understanding of the impact on a societal level and an individual level. Before we talk about consumer protection and the topic of today's discussion, what is mobile money and why is it so important to you and to the sector as a whole?
Yeah, I mean, it's a very interesting question, but I always like to keep it very simple. So think about mobile money as a digital wallet. So think about the wallet that you have in your pocket and it being on your phone. And so basically it's a wallet that allows you to store some money that you can be able to use for payments. But to also maybe make it a little bit simpler, mobile money is also a payment service. It's not really anything more than a payment service. And as we understand it mostly as it is currently, most policy and regulatory frameworks have actually issued mobile money providers with licenses to only provide payments. But of course, we have other services which are adjacent to it. But when you look at the customer who then uses it, it's usually the unbanked. And now I think we're about several years since mobile money started. It started in 2007 when Safaricom M-Pesa officially went live with M-Pesa. And the target was the consumer who doesn't have access to banking services. And it continues to be so. But we are continuing to see an emergence of more sophisticated use cases, which are also attracting the banked. And so it's no longer just a story of the unbanked, but we really need to always remember that this is a service that is actually tailored for the underserved, more specifically the unbanked. So I hope I've done it justice without making it very complex. I say this because sometimes people confuse mobile money to mobile banking. And so really the two are not the same. And so in some instances, you'll find somebody trying to talk about mobile banking and then they confuse it with mobile money. They're not the same. Yeah. So very important to make that distinction.
And geographically, where is the biggest adoption of mobile money?
Interesting, yeah. According to the State of the Industry report by GSMA, where I work, the biggest adoption still is in Sub-Saharan Africa. We were seeing a very interesting trend because we're seeing, much as it was a very East African story when mobile money started several years ago, we are seeing the growth now pivoting to West Africa. So West Africa is leading the pack right now, but then the highest number of accounts still continues to be around East Africa. So it's very much a very Sub-Saharan story, Sub-Saharan Africa story. But then again, we're also seeing mobile money in other parts of the world. APAC, for instance, South Asia is also really picking up. And we're also seeing bits of it in the Middle East region as well. Though I think the challenge has always been the regulatory frameworks in Middle Eastern countries. The other region that is also really picking up slowly but surely is Latin America. And we tend to think that probably this is also a market that has to be fully untapped when it comes to the potential of mobile money.
And why do you think that is, that some regions are ahead of others in terms of the adoption of mobile money?
Good question. Number one, definitely regulation. You know, when you look at how mobile money started 2007, like I said, nobody knew much about it. You know, central bankers never knew really what this was about. And so, as you know how regulators think, if they are not sure about anything, the easiest answer to say is no. And they're not really doing it from a bad place. It's because they're trying to ensure that the financial sector is protected because it might bring in, unintended shocks. But we really have to congratulate the Central Bank of Kenya back in the day, because in as much as they appreciated that this was a new innovation, they gave the environment to allow mobile money, and in this case M-Pesa, to really grow and be nurtured into something they could be able to regulate. And so it's well known that, the first permission they gave Safaricom at the time was a letter of no objection, just to allow them to proceed.
Right, okay.
And I think that later on they came up with a regulatory framework a couple of years later. This is to say that I think regulation has played a very important role, because a regulation can actually support or diminish innovation. And in Africa, there was a quick adoption. Regulators were very flexible and agile in just allowing it to really thrive. To date, we think this has been the case for this. And when you look at some of the mobile money mature markets, it will always trace back to a very supportive regulator. And I think that's really to really give them a bit of kudos on what they're doing.
Got it.
Yeah.
So before we get into consumer protection, just to really understand the benefits of mobile money. So for example, if you're looking at a smallholder farmer in rural Kenya, who it doesn't have access to a bank account or a smartphone or internet access, then how does mobile money help them?
The beauty about mobile money is that the only thing you need is a mobile phone, and it doesn't even have to be an internet-enabled phone. It can be a feature phone as long as it has network and it is working. So I think that is what makes mobile money very unique. And you can be able to access a very affordable mobile phones nowadays in many parts of Africa. But I think the most important element of mobile money that makes it also really good and quite accessible is the agent network. This is the backbone of mobile money, because these are the people who actually are at the grassroots level, and people whom the locals can be able to access to be able to register for a mobile money account. Now, traditionally, the brick and mortar for banking sector is always really hard to set up bank branches and all that. But when you think about the agent model across the different parts where mobile money is, it's very affordable to actually set up an agent somewhere and use that as a touch point between the people and the network, and of course the mobile money service to consumers. That unique model is what I think has really made it successful. That said, I think there's also been a lot of financial education and awareness really about what mobile money is. I think it's very hard to go to any part of Africa, if I could talk about Africa, where they do not know about Momo or mobile money or M-Pesa. So I think that has really kudos to also, I guess, service providers who've done a really stellar job in trying to make sure that there's awareness.
And what's the scale behind it in terms of, if we look at, let's say, Sub-Saharan Africa as a region, how many people are using mobile money regularly, or is their primary form of financial service or payments?
A majority use mobile money as a form of payments. Like I said, it's really the means that allows you to be able to pay for goods and services, to, make merchant payments and all that. A significant proportion of the African population is still unbanked, like I said. And I think really, not to say that the banks have failed or anything, setting up, bank branches is very expensive. And so traditionally it's not always, if a region or a place doesn't make commercial sense for a bank, the immediate thing they would do is to avoid it and go to a region that actually makes commercial sense. But then again, we have this very affordable tool, which is actually accessible to everybody, that has always made it simpler and more affordable for people to actually access it quite quickly and richly. I think this has played a critical role in ensuring that a significant majority of Africans would prefer this. But that said, I think when you look at how mobile money providers have also branded mobile money, they've made it very easy to know and easy to use with very easy language to understand, which unfortunately traditional financial services didn't do a very good job around. So in Kenya, for instance, M-Pesa is what? Mobile Pesa. Pesa means money. More, same thing. Mobile money is really a short form of that. So these catching phrases and whatnot also make it very easy for many people to use mobile money.
No, it makes a lot of sense. So your work at the GSMA, the Association for Mobile Network Operators, is largely centered on consumer protection and advocacy and policy within mobile money. So if we look at the scale and the success of mobile money, almost that's its own issue in terms of the fraud and the exploitation that would come with that, with its reach. So what do you see in terms of the landscape of challenges within consumer protection with this new tool?
Well, I mean, it's a mobile money is, like I said, of course, a tool of driving financial inclusion, and just like any other sector, there are always vices or negative sides that come with it, with any solution. I think looking back during COVID times, because this is the time where we saw a spike in mobile money adoptions. Thankfully, because I think we had all these COVID measures which were being put in place that didn't want people to touch money because it would spread, with the coronavirus. But what central bankers then did around that time is to try and make sure that mobile money was reachable and affordable and actually a safer means. And by safer here, we're actually talking about from a health perspective, because this was digital and it was not the easiest way not to spread corona. So they had to put in measures to drive adoption. So some banks increased transaction limits temporarily. There are those who, put in place pricing regulations to push more affordable mobile money services. But as we continue to see the spike in digitalization of the financial sector, we also saw an increase in things like, fraud activities and fraud typologies and all that. Largely because I think fraudsters will always be there trying to take advantage of innocent users. And so immediately the industry here, like the mobile money industry, faced itself with a situation where they needed to make sure consumers were protected. Fraud manifested in different forms and ways. You also have to really understand the profile of a mobile money consumer. Most of them are at best basic level education, maybe primary school levels. When it looks at, even when you look at how they interact with technology, it's from a very basic level. So
I can imagine with the digital literacy levels.
Exactly. So you can imagine if somebody, a social engineering attack where somebody just calls your phone, they pretend to be a close relative, and they end up accessing personal information, and in the process getting access to your account. Those are some of the common things that we were seeing, but of course there are many, and so there was need to just put in measures quickly to ensure that consumers were educated. But we can discuss a little bit more on that. But those are some of the vices we've seen. But regulators have also done a good job in trying just to make sure that consumers are aware, because granted, it's not something that can be led only to service providers to take care of. In places like Nigeria, for instance, the Central Bank of Nigeria has played a stellar role in driving financial education to mitigate some of these things.
Tell me more about that, about Nigeria.
Yeah,
So I
interesting.
imagine that, it's such a huge population. Are they one of the biggest markets for mobile money?
New market. I mean, mobile money, when you look at maturity levels for different markets, Nigeria is more or less like a new entry into the space. Of course, we have the likes of Kenya, Ghana, who were like, trailblazers in that sector. And then coming around 2020, the Central Bank of Nigeria putting in place the Payment Service Bank regulatory framework to sort of push mobile money through telcos. And the uptake has been good, modest. I mean, I think not as fast as we thought it would expect it. But one of the challenges we noted within the market was, of course, fraud was big. I mean, the consumers were getting attacked when they're still using mobile money at a very foundational level. And so the central bank, first of all, put in measures to be able to drive financial education. But I need to clarify that these were not just attempts to mitigate some of these consumer protection issues, but to also just drive adoption of mobile money. Because again, with the Payment Service Bank framework coming into place in 2020, there was an immediate need to just push financial inclusion through this platform. And it was evident that a significant number of Nigerians did not understand what mobile money was.
Right.
They would understood cash, they understood banking, but
This
understanding
middle
mobile
point
money
or
took a
somewhat,
bit
yeah.
of time. And so you can imagine the vulnerabilities that come with the fraud, within that sector as well.
No, I can imagine, especially with the new technology, then with that surge of fraud, it can really destroy trust
Yeah.
in communities for a long time, right?
Yeah.
So what has the Central Bank of Nigeria been doing in that respect?
I think, to be honest, they're really putting in a lot of effort, first of all, to empower the consumer, but at the same time, just to also make sure that regulations are streamlined, just to, that what mobile money providers are expected to do is very clear. And we capture this in the Mobile Money Regulatory Index that GSMA tracks. And so when you look at the scoring of Nigeria over the years, it's really improved over time. And when you narrow down to the consumer protection aspects of the regulation, it's really done well because we break it down to several layers. We look at issues like customer redress mechanisms. Are they clear? For consumers, do they know who to talk to if they have a consumer protection issue? Transparency issues, publishing T's and C's, for instance. It has to be very clear that a mobile money provider has to publish this. And many, really, just to mention but a few. So I think the regulator has done a good job to provide this information. But then at the same time, I think when you look at service providers, obviously they're out to make money and it's in their best interest to make sure that trust is built.
Yep.
Money is about trust. So if consumers cannot trust your platform, it's very hard for you to convince them to use it.
Yeah. So when we look at service providers, is there any that stand out or you've seen real good practice in the sector?
Well, I tend to speak for all of them, and so it's very hard for me to choose one. It's like choosing one child from another. But I'd probably say all of them are actually doing a good job. I mean, we work closely with MTN, Momo in Nigeria. We work very closely with Airtel, 9PSB, and all that. And I'd probably, just speaking on behalf of all of them, I think they've really put in their best foot forward to make sure, first of all, that they actually drive adoption. Speaking, for instance, on something as simple as transparency on pricing, I think all of them actually do publish the cost of using mobile money. It's very easy to go to the website, and it's very easy for a consumer to know this is the amount of naira I will spend to be able to send X amount of naira, which is really the kind of transparency we were talking about, to be able to push for affordability, accountability, and obviously just also trust. This is not the case sometimes in many financial services sectors, but this is one area I think I've seen Nigeria do a really, really good job compared to the other financial sectors within that particular market.
So leaving Nigeria, you've mentioned the hidden costs of using digital financial services and mobile money, which I assume is quite a big issue in consumer protection that you and your team work on at GSMA.
Yeah.
So in some of the research you've conducted, what have you found there?
Yeah, I mean, honestly, I think one of the things we've noted is that I think when it comes to transparency, it is a requirement by law that they publish the cost of using mobile money services. And so there's always information for consumers to look at, be it on the websites or be it even on the agent outlets. One of the first things you will see is a table with the tariff for the service you're going to use. But then again, consumers are also encouraged to ask for that information and agents are empowered to share it. So I think that much is transparent. And then, of course, when you look at the notifications that you get after a transaction or even before, I think a significant majority actually inform you how much that transaction will cost before they initiate that. It's been a lot of work over the years, of course, because obviously there's been a lot of push for transparency over the sectors to try and push for this. I may not speak at large for the entire financial sector because I think it cuts across different. But speaking for the mobile money providers, this is something that is something that was well published in terms of just trying to make sure that this is quite clear. That said, I think there are a number of partners who work with the mobile money industry. And sometimes we've seen cases where, of course, when you offer services such as digital credit, what most people don't understand is that digital credit, for instance, is a service that can only be offered in partnership between a mobile money provider and an accredited lender, or a mainstream financial institution. And in most cases, the person who owns the loan book will always have a certain level of information which they may need to be able to share out there. But I want to zoom into a specific category of lenders who are not registered or licensed in many markets. And in most of our markets, you will find these unregistered lenders providing services, these up lenders, and with zero information about costs and
An
all that.
uplender is what exactly?
I mean, there are many. I mean, we should go to your Play Store or Google Play Store.
Mm.
It's very easy to go and look for a lender who's offering digital credit services. If you want a loan, it's as easy as, just clicking, downloading the app, getting that loan on your phone. But what most people don't know is that these are not mobile money loans. But in many cases, because there's that lack of awareness of who's who and who's dealing with
Yeah.
what, unfortunately, the mobile money industry tends to get a lot of the beating or the flack.
Right.
And I think there's a lot of awareness that needs to be created around who can lend and who cannot lend. And I think this is really on the part of the central banks to be able to make that information a little bit clearer.
Those lenders that you're downloading the app for, that's kind of outside of the mobile money ecosystem, or are they
Correct.
dispersing the
Yeah.
loan in mobile money?
So they're actually outside of the mobile money
Yeah.
ecosystem. And in most cases, and I really have to thank the central banks because they've really done a good job in making sure that they are aware about all the lenders within a jurisdiction. But unfortunately, we still have a couple who would sneak into the App Store, start providing loans, and then nobody really knows where they are. They don't even have a physical office within a country. But they're really, in a way, pushing what I'd call very unhealthy lending practices.
Sure.
In many cases, because obviously there's a lot of negative PR around over indebtedness and whatnot. Unfortunately, like I said, the one entity that, or the most of the entities are actually known for this are either mobile money providers or banks, but not these entities who are not registered within that particular sector. So there's a lot of awareness that needs to be put in place to ensure that customers go to registered lenders, if not the mobile money provider led or the banks in this case.
So Kendi, you raise a good point, because over the last 15 years, there's been this evolution, right, of how someone uses mobile money, from payments to now these adjacent industries. You mentioned credit, insurance, saving products as well. So these consumer protection challenges can get larger as well, and sometimes they're out of the direct scope of a mobile money provider because of the partners that they work with. So as mobile money opens this suite of financial services, opens the door to wider financial inclusion, what can you do to address the consumer protection issue?
I think, first of all, it's always good to have the customer in mind when you're designing any service. And this goes to any sector. In some cases, you always have the consumer at the tail end, but have the consumer when you're designing the service. And always have these consumer protection incidences or situations played out very clearly at the design stage of the product. If anything, solutions always are there to solve us a particular problem. So I think it's important just to think beyond the problem you're solving, but also making sure that the consumer is protected. It's also really imperative of regulators to have these test and learn environments for any solution provider to test whatever they're coming up with, and to ensure that it's a requirement that the consumer protection elements are also tested. So I think that's just one way regulators can be able to support this. I think it's impossible of thinking of a sector that is not interconnected. And so here I'm talking about interoperability. And so some of the things I have seen personally, is whenever there are any interoperability solutions which are being pushed in a particular jurisdiction, often the consumer is forgotten, while of course it's being intended for them. I mean, let's look at, for instance, cases where a safety of the platform needs to be considered. It's important to understand if in an interoperability solution is put in place, how then would it impact the consumer, not just in providing the services for them, but in case maybe it fails, does the consumer have options? And so we've seen situations where regulators have mandated interoperability solutions without having to think about what if the mandated solution fails, and they're actually failing in some instances. In some markets, we've seen national switches which support interoperability failing for even up to a week. And of course, this is mandated. So obviously, as a service provider, there's nothing much you can do because the law requires you to send money through this particular centralized solution. But I think such situations would be effectively mitigated if there's a plan B, for lack of a better word, or a redundancy measure that at least allows for bilateral forms of interoperability. So just to name but a few, so it gets a bit complex
No, for
when you
sure.
start to really imagine the consumer at the end of the day.
Have you seen any of those Plan B examples in
Yeah.
practice?
There are countries which still actually do allow for a centralized form of interoperability and at the same time still allowing for bilateral arrangements. There are not that many because I think the natural inclination by central banks is to make sure that these solutions are mandated. But I think if I could use a good example, a country like Kenya, which of course is heavily led by mobile money, you can look at how the interoperability setup really works well because it's very hard to find situations where mobile money will be dead for like a week. I mean, at best, I think some of it will be for a few minutes, but in certain cases, and this is because really also it's a prerogative of the service provider to make sure that the service runs uptime. You know, the uptime is really good to be able to continue making the money. That said, we have seen cases, and please allow me not to mention countries, where the national switch didn't work for a week. And so on Christmas, I know there's a country where this payment platform, which is centralized, died for almost a week over Christmas. And so you can imagine the impact on the
That's the
consumer.
maximum time if you're in the rural area, you're traveling, or that's when your money will be sent.
Exactly. People need to send
Don't
money.
worry, I won't ask you the name of the country.
Yeah, and now it's not working, and then of course they will go to the service provider. The service provider doesn't have much to do really because it's under some framework. In such a case, if there was an interconnection bilaterally allowed, I think some of these incidences would have been mitigated. And to mention, but the incident was actually because of a cyber attack, which is another form of fraudulent typology that we're also seeing.
Yeah, I guess we're moving forward now into the next few years. This type of attack, and with the mass adoption of AI.
Yeah.
What are you seeing now as further challenges that need to be mitigated by the sector to protect users of mobile money services?
Yeah, well, I think to be honest, like I said, I think having the consumer at the in mind when you're designing services is important, so that you make sure that you play out all the scenarios. Thankfully, most service providers are not just speaking for the mobile money provider here, have invested heavily on cybersecurity tools and measures that actually ensure that things like cyber attacks or impersonation, or think about all the fraud typologies you can think about are actually mitigated. I think going into the future, it will be important to first of all ensure that we implement AI and we understand AI. I mean, you cannot be in this space and you do not understand AI. And I think already we can see, and we've done a paper in GSMA that looks at how AI can actually help mitigate money laundering and terrorist financing activities and whatnot. So there's a really big opportunity for AI. But people need to understand, first of all, AI. It's also really important to put in place proportionate safeguards when you're looking at mobile money specifically. And this is really trying to provide licensing categories that take into consideration what mobile money is or any DFS service is compared to other mainstream ones. The FATF has been a very strong advocate for proportionate KYC and consumer, CDD controls, because when you have these proportionate, it means that consumers are able to actually come into the digital financial ecosystem, and you're able to really understand how transactions are operating. What do I mean? In countries where there are stringent KYC measures, it means the consumer will definitely struggle to get on board, right? And it means they will also resort to cash. It's hard to mitigate fraud when it is happening within the informal sector. So the first thing is to make sure that we digitize the entire financial ecosystem, and then we innovate around that. Last but not least, and this is closely related to how we share data, we are seeing, and rightfully so, countries trying to have an element of data sovereignty. How is my country's data being used? If it's data being processed in Kenya, it needs to stay in Kenya and all that. This is to mention but a few. But we're also seeing that most countries, a majority of the countries that have flexible data sovereignty regimes that actually allow things like cloud computing, are better placed to mitigate fraud. Because again, remember, you need a test and learning environment, which in most cases is done in a cloud environment, to be able to allow your developers to play out and mitigate fraud. But if a country's regime restrict transfer of data to other countries, unfortunately, it means they're also playing catch up when it comes to coming with fraud mitigation initiatives. Countries which still have very stringent data protection laws, sovereignty, countries which restrict offshore transfer of data, are really playing catch up when it comes to fraud mitigation innovation. And so there's need to also just look at those frameworks to ensure that we're better prepared.
Great. You mentioned some stuff about AI and the GSMA report that you recently launched. I've been seeing a lot of activity from mobile operators in terms of how they're using AI for even fraud detection, fraud detection and scam detections. What have you seen about that?
Yeah, well, I think, and really, to be honest, I think they began, industries, mobile money providers began way back before we understood it was actually AI, because it's an industry that runs on a lot of data, and so already there were solutions which were already in place to look at how they would be able to predict fraud attempts and have solutions that can actually mitigate that. And so it's really encouraging to see how, speaking for this industry that I've worked with for a long time, to see how this was already in place. But then, of course, now we moved into the AI era, which we are now in. And of course, this has really streamlined everything. Granted, the number of cyber attacks on any platform in a day, crazy amount, right? Probably in thousands in a day. That can be tedious if you have to use human power to mitigate. And so you really need to look at very intelligent systems to be able to predict an attack and to mitigate an attack.
Sure.
Yes, and I think there's still room for AI to be able to play a critical role. We also have within the GSMA the mobile money certification program, which is a mark of excellence when it comes to some of these consumer protection issues. And in it, the GSMA encourages mobile money providers, and this is also really open to other, non-telco digital financial service providers, to have excellence when it comes to zooming into some of these consumer protection issues. And so when you look at any mobile money provider who has that mark of the mobile money certification, it means that there are certain mitigative measures or controls they have put in place to ensure that they get certified. And when you look at it, most of them are already employing AI.
Yeah.
That is really to tell you where this is also headed. Yeah.
I'm conscious now that we've much of our discussion today is focused on Sub-Saharan Africa, but Southeast Asia is also a big market for mobile money.
Yeah.
Do you have any interesting consumer protection examples of best practices, either from the service provider or the regulatory lens?
Yeah, interestingly enough, I think honestly, South Asia really is really what we consider to be, and to a greater extent, the APAC region to be what we may consider to be the future of mobile money. Don't quote me on this, but I think this is just based on my own personal, views and experience. There's a lot that is happening in terms of digitizing the entire ecosystem in the APAC region. I mean, when you look at a market such as Philippines, it's really one of the success stories of how an entire ecosystem can be interconnected and integrated. And when a system is fully integrated or really has attained such maturity levels, then of course it also means that fraud is just very close by there, and all these consumer protection issues are just lacking by. And when you look at how they've employed technology, I think it's really encouraging. My colleagues and I were actually in Manila last year to see how the likes of Gcash are actually operating in that part of the world. And one of the things that really stood out for me is how they're also really able to narrow down to how a consumer actually utilizes the credit they offer within the platform. And so this is a very good example that can also ensure that we are also addressing financial health responsibly. In many countries, you really have no say about how a consumer can use credit. If they have requested for credit and they qualify for credit, I don't think we can control how they'll use the credit. And sometimes there are cases about, and there are scenarios where we're told, some of these guys are actually using it for gambling and whatnot. And closely knitted to that, what we saw in the Philippines is that they actually have a way of tracking how that credit is being used for. And I think being able to track information to that extent is also good in ensuring that now we move into the era of financial health, not just financial inclusion. It goes to my point that perhaps the future of mobile money is actually now in APAC, and we need to see what's happening there.
Yeah, you just touched on something that I think is the motto of our podcast. Really,
Yeah,
it's
you can talk about access to accounts, wallets, bank accounts, but it's actually that next step, right? It's about how people use financial services and whether it has an impact on their lives, on their family, on their business. Ken, it's been great to have you on the show.
Thank you.
I really love meeting people who are, working day in, day out on a specific topic and can bring their levels of expertise. So before I let you go, I have 4 questions.
Okay.
So there's a few. So my first is a piece of advice that you have for a regulator in terms of what they can do, what they can look at to enhance consumer protection. The second is the same piece of advice, but for a mobile money provider or a digital finance service provider.
Yeah.
The third is for an institution that is outside of the financial sector, maybe in the development world, but that is interacting with communities that are using mobile money regularly. What piece of advice would you have for them? And the fourth is then for one of our listeners that is also an avid reader. What GSMA report or article that you've been part of would you recommend them go and check out to kind of further boost their knowledge after the podcast?
Well, thank you. Very, very good question there. I'd probably say for policymakers and regulators, it's important for them just to keep that open door policy, make it easy to be for service providers to access you. I think regulation is often a product of conversations, really. We are now in the era where innovation is really fast paced. So for regulators not to continue playing catch up, just keep the door open. Let us, they can collaborate with the sector to come up with even a more resilient ecosystem. For service providers, I think I'll probably say have the customer at the back of your mind when you're coming up with products. When you're designing services and products, the first person you need to think about is the consumer. How will they interact with this? Are they protected? Are they covered? I think that's important. I mean, at the end of the day, innovations are there to solve a problem. And so it's really hard not to have the consumer at the back of your mind. For the wider ecosystem, stakeholders who are keen on the financial inclusion sector, I think we are now slowly moving into the financial health environment. The conversation really should be around how do we then foster collaboration, cross-sectoral collaboration, so there are different sectors which can come together. We have fintech players coming in who are not really traditional service providers. How can we create an environment to support these conversations to happen with all these players coming in? And I think closely tied to the last question, I'd also really encourage readers, people who are big on research on financial inclusion, to check out the Mobile Money Regulatory Index, which really maps out regulations across literally all mobile money markets. We actually assess 92 frameworks and be able to tell you, is a regulation good for mobile money or not? And the reason why I say this tool is quite interesting is because it's geared it's geared for the regulator, it's geared for the service provider, it's geared for the dev community. If you want to know where to channel philanthropic capital and you lack a tool to tell you, I think the Reg Index will actually be your first stop before you explore anything else. So I think I'll actually finish with that and say, if you haven't read the Mobile Money Regulatory Index, please run and quickly just have a look at it.
Great. We'll include it in the show notes as well.
Yeah.
Again, thanks so much for being here. And
Thank
if
you.
our listeners want to connect with you further and discuss, where can they find you?
Yep, so I'm on LinkedIn, Kennedy Kipkemboi. You'll probably see my face. Of course, my profile is under GSMA where I currently work. But then again, you can also find me on email, kipkemboi@gsma.com. You can always get me there, and happy to answer any questions.
Thanks again.
Thank you very much. All right.
Thanks.
And that's a wrap. If you enjoyed this episode, please make sure to subscribe or follow Financial Inclusion Unlocked wherever you're listening, whether that's Apple Podcasts, Spotify, or any other podcast app. That way, you won't miss any of our remaining episodes we have coming your way in this season. You can also connect with us on LinkedIn. Just search for Financial Inclusion Unlocked to join the conversation. This podcast is produced by SIJ Media, and Series 2 is proudly sponsored by CGAP. For more information on their work, check out the website at cgap.org. That's cgap.org. I'm Jack Farron, and I'll see you next week.